This is a review of Chris Butler with Project Option, and a few people have asked me to review Project Option, so I started looking into it. And initially, when I look into many of these guys, I'm actually quite skeptical. And I did pretty extensive research as far as like watching a few hours of his videos, and his videos have a tendency to be quite long. So definitely stay tuned and watch this video so that you can learn my thoughts on Chris Butler and Project Option. So, Project Option. Chris Butler used to work with Tastytrade. I believe he was a computer science major, and then he switched majors to finance, and then he emailed Tom Sosnoff and then worked at Tastytrade, I believe, from like 2013 to around 2016. And I've actually seen some of his videos on Tastytrade. They're pretty good. And then he has modified their strategy a little bit. And from what I can take of his modified strategy, there are a few things that I really like. The first thing is that Tastytrade encourages people to trade small, trade often. And Chris explicitly said that he likes to maintain a maximum of 2 positions on at one time, and oftentimes 1. So he will not trade often at all. Instead, he will have like 1 or 2 positions on at any one time. And I definitely believe that this concentration of risk and allocating your capital only to the best opportunities is highly, highly advantageous. One of the biggest mistakes that people make is that they spread themselves out too thin. For example, if you want to be successful in life, you need to focus. And I definitely believe that many people, when they allocate capital to the best opportunities, they will be hesitant to allocate 20% of their portfolio to that one position. And then for diversification purposes, they will then enter inferior trades, which will then end up getting tested and causing them a substantial amount of stress. The other reason why I believe it's very important to keep a concentrated portfolio is that you want to reduce your distractions. And God forbid something happens like March of 2020, you don't want to have 10 or 15 positions that you have to manage all at one time. Instead, in the worst case scenario, during a black swan event like we had in March 2020, it's extremely easy to manage one position so that you're not going to get overwhelmed and that you're not going to get stressed out. So the fact that Chris has modified Tastytrade's strategy and he encourages his users to only trade 1 or a maximum of 2 positions at a time, in my opinion, is fantastic. The other thing that I really like about Chris is that he seems to encourage his followers to trade vertical credit spreads. So whereas 3 to 4 years ago, I was a huge proponent of selling naked options because it maximizes the amount of credit that you receive and it's also easier to roll, I now believe that most people, probably every options trader, should sell vertical credit spreads. The only caveat to that is I do also believe that during periods of high implied volatility, when the VIX is trading over 20, during those periods, especially after a rapid volatility expansion like we experienced in March 2020 or December 2018, I definitely believe that during those periods, after the VIX has spiked above like 40, then it is definitely in your best interests and your best financial interest to trade naked options. And the reason is that the probability is in your favor. Where the highest that the VIX was intraday during March 2020 was about 84 or 85. So if you sold options during that time period, then you are able to benefit from the market turnaround as well as the volatility contraction. Even with the VIX trading at about 85 and the market continued to go down, as long as the market didn't continue its free fall after it fell about 36% in 33 days, then even if it continued to go down, volatility would still contract to a more normalized level of about 40 or 50. So the market wouldn't even have to go in your favor for you to make money based upon the volatility contraction. So I do definitely agree with him that traders should be trading spreads to protect against the black swan event, with the one caveat that during periods of high implied volatility when the VIX is trading over 20, you should not be trading spreads, primarily because buying options when the VIX is very high is incredibly expensive, and it's going to significantly decrease the amount of credit that you receive. The one thing that I disagree with Chris Butler about is that he encourages his followers to close out spreads early if those spreads go against them and if it maxes out at their target loss. So, for example, if you sell a spread and you collect $2, let's say it's a $6 wide spread. If that spread increases in price and you sold it for $2 and then it starts trading at $3.50, then Chris encourages his followers to close it out early and to take the loss. In my opinion, I would not agree with this, primarily because based upon my experience, usually what transpires is that the spread that is going against you is simply going to normalize, and then that trade is going to end up being profitable. You will be much better off at trading more narrow spreads and decreasing the number of contracts that you trade than it would be to close out a defined risk trade early. The reason why I feel so confident in disagreeing with him about this is that by definition, when you trade a vertical credit spread, it's a defined risk trade. So as long as you reduce the width of your strike prices, so instead of trading something that's like $30 wide, if you reduce it to 10, then your buying power is going to be reduced by the width of the strikes less the credit received. So if you trade one contract that's $10 wide and you collect $3 for it, then your buying power is going to be reduced by the 100 shares, the $10 of maximum loss, so that's $1,000, less the $300 of credit that you receive. So your buying power is going to be reduced by $700. As a result, I really don't see the benefit of closing out the trade early just because in the short term it goes against you, when in most situations that I've been in, you're not giving yourself the ability to roll that position, and you're also not giving yourself the ability to let theta decay work in your favor, and you're not also allowing the stock itself to normalize in price. So that's a small disagreement with him that I have, where if you're already trading a defined risk strategy, so I really don't see any benefit to closing out that trade early and accepting the loss, because from my personal experience, probably 7 to 8 out of 10 times, that trade is going to turn around the other way and show you a profit, especially because it's already a defined risk trade. So by closing it out early, you're not giving yourself the ability to roll that trade. You're not giving yourself the ability to allow theta to work in your favor, and you're also not giving yourself an opportunity to let the stock normalize. I definitely agree with Chris regarding technical analysis. He does not use it either. So I was very pleasantly surprised with watching his videos. So there are other things that I disagree with. For example, he'll buy long dated call options. If he's very bullish on the position, he'll buy a long dated out of the money call option. There are much better ways to structure a transaction that you are strongly bullish on than buying a call option. But besides that, I mean, overall, Chris is probably one of the best resources. I know that I've been critical of Tastytrade before, where I definitely do not believe that Tom Sosnoff makes money as a trader. I am also critical of Option Alpha, where in my opinion, I don't believe that Kirk Duplessis is a profitable trader. However, in my opinion, I definitely cannot necessarily vouch for Project Option's profitability, but I definitely believe that he's a great resource. Remember, if you want to make money in the stock market and be a profitable trader, you need to be patient, disciplined, and you need to make very good decisions. For many of these traders, the difference between being profitable and losing money is all in the nuance, meaning things that I might not necessarily be able to communicate to you very well, but when I'm setting up a transaction or identifying an opportunity, someone else might make that trade. And I might look at that same trade and intuitively, based upon my experience, based upon the way that I evaluate the markets, I might not make that trade. And maybe 6 out of 10 times, that trade ends up being profitable. But maybe 4 out of 10 times that trade ends up blowing up. And I think that it's that small nuance where, based upon our experience, based upon our perception and interpretation of the risk that's inherent in the market and in that specific position, those are the distinguishing factors between what makes a trader highly, highly successful and what makes an average trader, or what also makes a losing trader. It's that discipline, the patience, the intuitive nature when evaluating a position. Now, that intuitive nature is something that can be honed over years of practice and years of adjustment. Personally speaking, I am very OCD about consistently and constantly improving myself. So it's extremely rare for me to have a losing position because I always am learning from the past in order to improve. Now, while I'm not being critical of Chris, he does believe that options in nature are not a store of value, which I agree with, but he also seems a little bit down on options trading and believes that for many people it's going to destroy their wealth, and he would not encourage his followers to trade solely options. And this is something that I disagree with, where I definitely believe, and it's something that I've been doing for years, that you can earn tremendous returns by being conservative, disciplined, and learning the nuance so that you develop your own strong intuition. I don't believe that you necessarily have to own stock and sell covered calls against it in order to be highly profitable and successful in the marketplace. So there are small things that I disagree with Chris about, but overall, I think he's an amazing resource. His videos are well made, and I definitely would highly recommend checking them out. I think that he gives good information. Okay, the one thing is, if you're an advanced trader, are his recommendations going to help you make money? And I'm not so sure about that. I definitely believe that his recommendation about trading less positions and holding less positions in your portfolio is worthwhile, but I am not so sure and clear yet about his actual performance. He does not post his trading statements, and I am not certain how profitable and successful a trader he personally is. However, taking all of that into consideration and my personal opinion and my intuition on Chris Butler is that I do definitely believe that he's a credible source of information. I think his channel is amazing. And if you want another resource to learn basic options trading without advanced strategies, without the nuance, without really the nitty-gritty of how to identify opportunities and pick the best trades and how to manage a position, I think that Chris is really a great resource. So yeah, I would highly recommend him. I was very pleasantly surprised. And if you have a question, leave a comment below.